Okay, we're continuing with our grant that was awarded, and here's where we finished the grant. We have submitted paperwork, as it says here, for payments all along according to the contract. Maybe we were paid 20% up front, then we were paid another 30%, whatever the contract terms allowed us to do. And here we are finishing it, and we submit the final dollars that we incurred. We get the money from the government. Eventually, we're going to get the money. When we submit it, of course, we do the same thing. We debit the receivable of the grant, and we credit the income of the grant, the revenue. And again, just to reiterate, when we're doing this, remember, we've incurred the expenses. The expenses have already been incurred. They're on the books at accounts payable. So what gives us the right to do this is the condition has been met for us to record this. Theoretically, we could record this every time we spend $1, but it's a little problematic to do that every time, so we'll do it on occasion. We'll make these journal entries on certain occasions, either when we've reached the mark when we can send the monies to the requests to the government based on our expenditures, or other periodic time frames when we'll trigger to do the actual debits and credits here. But again, theoretically, every time we spend $1 that's towards the grant, we've released the condition of the receivable, so we can record the receivable and the corresponding revenue. And that means when we get the final money, when we get the money from the government or whoever's giving us this contract, the cash will come in, and we'll just simply credit the receivable. And that basically finishes the transaction. In this particular case, we'll point out something not necessarily totally new, but a little bit, and that is our direct expenses in this project turned out to be, for purposes of example, $85,338. We took, as part of the overhead, we took 13.8% times this amount. Now, why did we do that? In one class, we saw where what we were doing is the following. We saw that we were figuring out an overhead rate. How did we figure that out? Well, we took our overhead and we divided it by our direct costs, and that gave us an overhead rate. And what that overhead rate does is it allows us to do the following. Let's just write it out for purposes of making it clear. This is our overhead. That's the approved overhead. These are the approved direct costs. And what we do is we say to the government that we predict our overhead to be, based on our experience, we predict it's going to be 13.8% of the direct costs. And so therefore the government will, in the contract, in the grant, it'll approve that. They'll say that's fine, that's okay. And what we will then do is we will bill the government, every time we bill the government for direct costs as we go along in this contract, for every $1 of a direct cost, we'll add 13.8 cents as our overhead, because that's the ratio of overhead to direct costs. So the result is we'll spend, and the reason why this is done is that the government in this particular contract example is not saying we'll only pay for direct expense, we'll pay for direct plus a negotiated amount for overhead. The negotiated amount was the overhead rate that we historically have had, and so they'll pay that amount that they agreed to, which in this, again, example is 13.8 cents per dollar. And therefore, when we incurred, let's just erase the board so I can point it out easier, when we incurred $85,338 as our direct cost in total for this, we multiplied it times 13.8%. That gave us 11,774, I believe it is, or yes, I think that's what it gave us, or whatever number it gave us. Well, let's do it. Let's do the math. What the heck? 85,338 times 0.138. So again, 85,338 times 0.138 is 11,776. Oh, can't believe I had the wrong number for the last number. All right, so 776 and change. Add that to this, you get 97,115 when you round it up. And that's the amount that we're entitled to charge towards the grant, and that will be part of the approved cost of the grant. Now, we have to have incurred this amount of overhead, because if we didn't incur that amount of overhead, we're going to have to give some back to the government. That'll be done when we do our year-end statement. It'll be a true-up, but that's what they call it. True-up just basically means what were the actual expenditures, because the 13.8% rate here is based on historic, so we'll see what we actually did incur in overhead in the year of the contract. And even though what I'm saying makes a lot of sense, it's all according to the terms of the contract. There could be different terms, so just figure that these are the kinds of concerns you're going to have with a contract or grant, and you're going to be looking at those every time you have one to see what it says, and you'll do the accounting accordingly. And you'll do the record keeping accordingly as well. We may have more to say about this as we go along. Net result at this point is you'll notice that the total, according to our overhead allocation, means that with our direct costs and our overhead, the total, which is $97,115, is less than the $100,000. So you might say, well, do we have to give that back to the government? And it all depends on the contract, you see. So we're going to go back to what's the deal. In this particular example, we don't give it back, and so we're allowed to keep it, because the deal is that you have to at least incur the deal was we were allowed to keep it. It could be that, we'll come to this in a second, it could be that, I think this is the slide I want to go to. Nope, it's not there. All right. It could be the following. It could be that the government will say, no, you don't keep the difference, you give it back, or we don't give it to you, in which case the total grant will only turn out to be this $97,000. That'll be the total, not the $100K. It all depends. Some grants allow the following. Let's do another example, just for the heck of it, and for good reason. Some grants will say you're allowed your direct cost, you're allowed your overhead, and by the way, there are direct costs that are allowed and direct costs that are unallowable. You're allowed your overhead based on your rate. We've seen what that looks like. So that'll be another number, and we'll get a total. And then they'll say, and you're allowed a allowable profit amount according to the terms. They'll call it profit or surplus, and there might be a certain amount you're allowed, and that's the total that you can have based on the contract. If this goes over the ceiling of the contract, you don't get it. If this comes under, you get to keep it. So these are how these contracts work. You may want to have some questions for me in class. Feel free to either email or bring them up in the Wednesday class. I would be very happy to answer those. All right, let's move along. Let's just see. The government pays late. So they'll pay the difference that they owe you at that point. It'll be cash coming in, and the credit will be to the grant receivable. And you're done. As a result, what you're going to be left with is you're going to be left with all the costs for the project going to the project. So your program service, in this case, your program service, or whatever you want to call it, this particular program will have come out to a total of $97,115. This is for your financial statement, and the surplus will go to the bottom line of the unrestricted net assets. And the end of the story. And since that is the end of the story here, and then we go to a new topic, we will pause here and come back.